determining amount of tax paid or tax provided. I hope you can hear me and can see the screen, right?
Yes, sir. Yes, sir.
So, with the opening and closing balances of provision for tax reflecting in balance sheets and the amount of tax provided for the year or tax paid during the year, the other unknown amount can be determined. Both the amounts of tax provided and tax paid are needed for cash flow from operating activities. So that is why we should know both these amounts. So this is what guys we have been given. This is the extract of balance sheet of Ayanta Limited as at 31st March 2014 and as at 31st March 2013. where we have been given the balances of provision for tax. And in additional information, we have been given the amount of tax paid during the year 23-24. So you will prepare provision for tax account and working notes as I prepared in my previous example. Here, we will write opening balance of 15,000 here, closing balance of 12,000 here, and the amount of tax paid during the year is 19,000. That will come here on the debit side of provision for tax, for which we write to bank, and with this we get the balancing figure. So I've written the opening balance, the closing balance, and the amount of tax paid during the year. We do the total of debit side. That gives us 31,000. The same I write on the credit side. 31 minus 15 is 16,000. This is the amount of tax provided for the year 23-24. Here we write balancing figure. And this you will do in working notes. Am I clear?
Yes,
Yes, sir.
On the
Yes,
credit
sir.
side of on the credit side of provision for tax account, there is always tax provided. On the debit side, we have tax paid. Either of the two things would be missing and the other would be given in the question, as it is given here, apart from opening and closing balances. Right? If in a question, guys, balances of provision for tax account are not given in the given balance sheets at all, but in additional information, you have been given either the amount of tax provided or tax paid. In that case, for preparation of cash flow from operating activities, amount of tax provided would be equal to tax paid. Means both the amounts would be same. We will assume that whatever tax has been provided, that is equivalent to tax paid, or whatever amount of tax paid is there, that is equivalent to the amount of tax provided. I hope you have understood this also, guys.
Yes, sir.
Right? So I start noting it down from here. Guys, here you write and, not or here. Here we will have is. So guys, I hope you have understood everything about tax provided or tax paid, right?
Yes, sir.
Yes, sir.
Okay, now guys, you know that for companies, statement of P&L account is also prepared in vertical format like this. This is the format of statement of P&L. This we have seen under the chapter in the chapter financial statements of companies, right? At the end we get profit after tax here. Once profit after tax are determined, these profits are taken to notes to accounts of reserves and surplus. These profits are taken to notes to accounts of reserves and surplus, right? Why I'm explaining you this? So that I could now tell you how we calculate for cash flow statement the very first item, that is profit before tax. This is the very first item that you have to mention in your cash flow statements. So how do we determine this amount? Let's understand that, guys. I'm writing here hypothetical figures. So we write here balance in statement of P&L as at the end of the previous year. Here I am preparing reserve and surplus as at 31st March 2024. I am making notes to accounts of reserves and surplus as at 31st March 2024. In this we show balance in statement of P&L as at coming from the previous year, that is as at 31st March 2023. Let's say this amount is 1,62,000. To this we add profit for the current year. Which profit? Profit after tax. That is 30,000 a year. So this we add here. Sum total is 1,92,000. From this if any interim dividend paid during the year 23-24, that is subtracted, right? Let's say amount of that is 15,000. We also subtract dividend appropriated for preference shareholders. Let's say amount is 50,000. We also subtract dividend appropriated for equity shareholders. Let's say that is 85,000. We also subtract transfer to general reserve. Let's say that is 7,000. And transfer to any other reserve. Any other reserve of revenue nature. So it will not, here we will not have any transfer to capital reserve. Let's say that is 3,000. It means from this total profits, these are the amounts that have been appropriated. The way we prepare P&L appropriation in partnership accounting, the same way the profits have been appropriated. So how much of the profits have been appropriated? This much. In form of dividend, these three are dividend, and these two are transferred to reserves. So total of these appropriation is 150 and 10, 1,60,000. It means statement of P&L at the end has balance of 32,000. Balance in statement of P&L as on 31st March 2024 is 32,000. So this was the opening balance in statement of P&L. This is the closing balance in statement of P&L. Both these balances will reflect in balance sheet under the note of reserves and surplus. Right, guys? So this is what I have actually shown you here is appropriation of profits. Right? In the notes to accounts of reserve and surplus, we have many other reserves as well. Like we have general reserve, we have debenture redemption reserve, we have capital reserve, but that I am not showing here as of now. How much we have transferred to general reserve? Yes, that I have shown. But what is the balance of general reserve as at 31st March 2024? That I have not shown here. My purpose is to make you understand how profits are appropriated in case of a company. Have you understood this? Or you have any doubt and any question in this, guys?
No, sir.
I'm asking everyone.
Yes, sir. Sir, do we also add or subtract the return on tax?
No. Which tax?
Return, sir.
Return means
Return on tax.
return on tax. What is this?
Sir, the
Refund of
tax
tax
that,
you're asking or return of tax?
sorry, refund of tax.
Refund of tax, right? Refund of tax
Yes,
will get adjusted with your this tax itself, right?
Okay,
So,
sir.
yeah. So that refund of tax does not come here at all. Akshita and Taman, have you understood this?
Yes, sir. Yes, sir.
Sure. I'm asking you guys.
Yes, sir. Yes, sir.
Okay. So I show you actually the notes to accounts of reserve and surplus. That is why I'm changing it a little bit. There won't be any changes in the calculation. So here the 32,000 what you're finding in the outer column actually is the amount of balance in statement of P&L as at 31st March 2014, right? If you understand this, by doing the reverse calculation of this, you have to find the amount of profit after tax for the year, that is this amount. How? Let's understand this, guys. You have to do the reverse calculation in your working notes while while doing a question of cash flow statement. You have to do reverse calculation of this. Means you have to start your calculation from here. To 32,000, you will add these items. That is, you will add 160. So 32 plus 160 will become 192. From 192, you will subtract opening balance at the in the statement of P&L, that is 162. So 192 minus 162 will give you the amount of profit after tax. Once you find the amount of profit after tax, to this amount you will add tax paid during the year. And how you will find that tax paid during the year? That I have already explained you here. Sorry, tax provided during the year. To this 30,000, that is profit after tax, you will add tax provided during the year, and with that you will get to know profit before tax. Have you understood this, guys, or not?
Yes, sir. Yes, sir. Yes, sir.
Okay. Here I have mentioned dividend appropriated, right? It is not the amount of dividend that has been paid during the year, no. It is only the appropriated amount. And dividend out of the profits of a year can be appropriated only in the next or in the coming accounting year. I repeat, dividend out of profits of a year can never be appropriated in the same year. It can be appropriated only in the next accounting year. It means these dividends are not coming from the current year's profit, which is 30,000. No, this is coming from the previous year's profit, that is the profit of accounting year 22-23. This is the profit of 23-24. From the current year's profit, you cannot appropriate dividend in the same year. The reason is that you get to know profits of a year only once the year is over. That is in the next accounting year. By the night of 31st March 2024, you cannot know profits of accounting year 23-24. It takes time. You have to collect so many data from different branches, from different offices, from different factories. Then you consolidate them, then you adjust them, and then in the next 2-3 months, you finally are able to prepare your financial statements. Until you prepare your financial statements, you will never get to know your profit after tax. Since you do not know profit of a year in that year itself by 31st March of that year, you cannot appropriate dividend out of those profits in that year itself, right? Means dividend appropriated in a year do not belong to that year, but to the previous accounting year. Have you understood, guys, or not?
Yes,
Yes,
sir.
sir.
Yes.
This is the timeline, guys. Let's say we are talking about an accounting year 23-24, profits of which are determined by April, May, June of 2024. It means profits of 23-24 can never be found in that year itself. It is always found after the year is over, maybe in the month of April or May or June. Once the profits are known, then dividend is planned by directors and then is proposed in the annual general meeting of shareholders, which usually occurs in most of the companies after June. So for this company, for this year, the AGM for the accounting year 23-24 will occur after June 2024, in which directors will propose the dividend in front of shareholders. After that, shareholders approve the dividend. Once they approve, then only dividend is appropriated, that is recorded in books. So it means dividend of this year is being recorded in accounting books of not this year but of the next accounting year, that is 24-25. Have you understood, guys, what I say, what I explained here?
Yes, sir.
Everyone,
Yes, sir.
Abhi, Rakshita,
Yes, sir.
Falak. So dividend appropriated here out of the profits of 23-24 actually are not out of the profits of 23-24, but they are out of the profits of 22-23. We are appropriating them during 23-24. It means they belong to the accounting year 22-23. Now, why you should know this? Because sometimes you are not given in questions amount of dividend, but you are given only rate of dividend, percentage of dividend. So that you do not have to apply on the capital as at the end of the year for which you are preparing CFS, but you have to apply that rate as at the share capital of the previous accounting year. Have you understood, guys?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
Okay. Here I took one more thing, guys, that is interim dividend. Yes, interim dividend is always of that year itself. Because interim dividend is paid by companies before end of that particular year. That is why we call it interim. In the first 5 months of an accounting year, directors of a company find that they have earned very good amount of profits just in first 5 months from April to let's say August. The profits are so big that they decided to pay dividend then only instead of waiting for the year to end. Such dividend paid in the month of August to September is interim dividend. So that dividend has been paid out of the profits of that year itself. Right, guys?
Yes, sir.
Yes, sir.
During an accounting year out of the profits of that year itself. This information is given to you guys. With this information, you have to calculate profit before tax so that we could prepare cash flow statement for the year 23-24. Right? So, guys, you first note down this and then we go. Okay, before this, you have to note down this also. Yes, you noted down everything till here. You do not need to note down this format. This you already know, guys. Yeah, note down this, guys, everyone.
Done, sir.
Note down this, guys, all. Akshita, I hope you are noting down everything and you are with us, right, Akshita?
Yes, sir.
Okay, so guys, we will take balance statement of P&L as at 31st March 2024. That is as at the end of our year for which we have to prepare cash flow statement, and that is 32,000 rupees. To this, we will add all the items of appropriation. So I have taken 32,000 here. To this, I am adding interim dividend paid during the year, which is given to us in the additional information, that is 15,000. To this, dividend appropriated for equity shareholders. Here, the rate of dividend is given to us, that is 10%. This we have appropriated during the year 23-24. So this 10% we have to apply on the equity shareholders as at the end of previous year. That is on this amount and not on this 10 lakhs. During the year 23-24, we have appropriated dividend for equity shareholders, but that dividend has been appropriated out of the profits of the previous accounting year 22-23. So whatsoever is the amount of share capital as at the end of 22-23, that is 8,50,000. On that only we have to appropriate dividend at the rate of 10%. So 10% of 8,50,000 is 85,000. Since we are appropriating dividend for equity shareholders, we already have in our capital structure preference share capital, and we know that preference share capital are paid dividend first. It means we also need to appropriate dividend for preference shareholders, whether mentioned in the question or not. The rate of dividend to preference shareholders is 8%. So 8% of 6,25,000 we will appropriate, and that comes to rupees 50,000. So that we will add here. Right? In from our balance sheet, we can see that earlier general reserve was 5,000 at the end of previous year. Now, by the end of current year, it has become 12,000. It means there is an increase of 7,000 in general reserve. General reserve increases only when we transfer from profits to general reserve. It means during the year 23-24, we have transferred from our profits rupees 7,000 to general reserve. So that also we will add here. Add transfer to general reserve 7,000. Debenture redemption reserve is also a reserve of revenue nature in which at the beginning of the accounting year 23-24 or at the end of previous accounting year 22-23 there was no balance, but by the end of the current year the balance has increased by 3,000. It means this 3,000 also has come here from current year's profits. So that also would be added here. So here we will write add transfer to debenture redemption reserve 3,000. So these were the amounts of, and these are the items of appropriation of profits. We will add all these things to 32,000. So this is 1 lakh 60 plus 32 is 1 lakh 92. From this we will subtract balance in statement of P&L as at the end of previous year. That is as at 31st March 2023. And this amount also we find from the given balance sheet. As it is given here, 1,62,000. So we'll subtract 1,62,000 here. And with this, whatsoever is the resultant amount, that is our profit after tax for the year. For the year 2023-24. To this, we add tax provided for the year 23-24. And that is given to us in the question, that is 10,000. So now the amount that we have got, 30 plus 10, 40 is our profit before tax for the year 23-24. And this is the item from which you will start your cash flow statement. Under cash flow from operating activities, you will write very first item, profit before tax and extraordinary items, and that is rupees 40,000. Have you understood all, guys?
Yes, sir.
I'm asking
Yes.
you all.
Yes, sir.
Good. So since you have already noted down everything till here, guys, you have to note down from here. Please note this down, and that's it for today, guys.